So what you see is if we get into a situation where we're going to have yield curve control, the government's going to have to print a lot of money, fine, but that printing is going to cause a lot more inflation. And so, the 9% inflation that we saw as the peak in the COVID example, it could become even higher in the next time around. And I remember the 70s very well. I was a teenager, but I remember the 70s very well. And there were like three waves of inflation. And history shows you once you get into an inflationary cycle, it's very hard to stop it, until you do something really extreme, like what Volcker did by putting rates at 20%. And so, I believe we are now in an inflationary cycle. And, the price of gold and the price of Bitcoin and the price of the bonds, the long bonds are showing us that.
History has a way of repeating itself, especially when it comes to money. Every time governments spend beyond their means, the solution has been the same: they print. But when money printing becomes the only option, the costs don't disappear. They simply shift onto ordinary people through the silent tax of inflation. Once an economy slips into that cycle, breaking free requires extreme measures. Today, many economists argue inflation is under control. But Lawrence Lepard, a seasoned investor, historian of financial crises, and author of The Big Print, warns that what we've seen so far is only the beginning. He believes the United States is standing on the edge of another massive money printing cycle, one that could unleash waves of inflation far greater than what we've already endured. Lepard points to history as our guide: the runaway inflation of the 1940s, the multiple waves of the 1970s, and the dangerous precedent set by abandoning the gold standard in 1971. In each case, money printing and unsound policy led to higher prices, rising inequality, and social unrest. And according to Lepard, today's debt burden and political pressures virtually guarantee that more printing and more inflation are coming. In this video, we'll break down Larry Lepard's urgent warning about inflation, sound money, and what he calls the sovereign debt crisis. We'll look at the historical parallels, the hidden costs of inflation, and why Lepard says Bitcoin and gold are the lifeboats in a storm. So, make sure you hit that like button, subscribe to the channel, and stick with us until the end, because what Lepard lays out could change how you think about the future of money. We appreciate the support and hope you enjoy the video.
There have been a number of events. I mean, the Founding Fathers obviously wrote the Constitution based on sound money, and since that time, we've slowly but surely slipped away from it, and more recently in a very accelerated fashion. There were many, many steps along the way, and the book details those. I mean, even back in, 1865, the Civil War, Lincoln created greenbacks, which were by definition unsound money, so that was a test case. But the Federal Reserve came along and they created a backstop so that banks could create unlimited amounts of money and not have to worry about the penalty of doing so. And then probably the biggest, Roosevelt grabbed all the gold in the 30s, and that was another bad step. But probably the biggest, most modern step that most people remember and can relate to is Nixon taking us off the gold standard in 71, as you pointed out, and everything became fiat. And then since then, it's only gotten worse, but kind of incrementally. It's like small leaks in the dam, but now the leaks have gotten quite large. And so more recent events. I mean, the book is called The Big Print, and it's funny because I believe another big print is coming. But we've actually we've had two big prints. We had one in 2008 when the Fed balance sheet went from 800 billion to 3 trillion plus. We had another in 2020 when the Fed balance sheet took another jump up to a peak of I think 8 or 9 trillion. It's now back just under 7, and I think there's another one coming. And so I personally believe that sound money is the problem of our age, and that the fact that we have unsound money is why our society is going through all the turmoil that it's going through politically and otherwise. And I think that the inflation that we're suffering through, it's not a bug, it's a feature of this system, and it's going to continue and it's going to get worse. And so I think we had a 40-year deflationary trend, which we can talk about. I think a lot of people, including politicians and others, hope that 2008 was a one-off or 2020 was a one-off, and we'll get inflation back under control and we'll go back to operating the way we were operating. And I don't think that's a true statement. I think sadly we now live in a very inflationary world, and I think most of us see it, that it's bad and it's getting worse. And so with the book, what I tried to do and I wanted to do, and the fraud that's been played out against people, the average person, it's sophisticated. I mean, this is not something that you learn in school. They don't teach it in school. And what I wanted to try and do with the book was to to explain to everyday people, any station in life, didn't have to have a finance degree, how and why they've been taken advantage of, and how we got away from this very important core principle, and that if we want to restore our society to what it used to be in earlier times, we need to get back to sound money. And I mean, so that's all the bad news. The good news is, the book's two parts. Part one is, what's the problem? And it's that we have unsound money. Part two is what's the solution? And it's a return to sound money. And I think what the markets are saying to us is we're going there. And the reason we're going there is that the system as we now have it isn't working, and that's getting more and more apparent as we go along. Why is it acute? I mean, it's acute because of math and compound interest. And so, one of the charts I like to show very often is the growth in GDP and the growth in the debt burden. I mean, when you start taking on debt to grow a society, it can be a good thing. This just goes to show you how acute the problem became in 1971. This is a chart of inflation from 1800 to 2005, and of course it keeps going up after 2005. It's just the best chart I could find. And what it shows you is that wars were generally inflationary, but somewhat amazingly, throughout most of the 19th century, inflation was not a problem. And then it began to become a problem post-World War II, and it became a very severe problem after 71 when we went off the gold standard. And so we now live in an inflationary age because we have fiat currency. And as a result of that, what's happened is in an inflationary environment, it makes sense for people to use debt to fund growth. And so they borrow knowing that they'll have to be able to pay back in diluted dollars. And so our debt growth has been in excess of the rate of growth of the GDP. And GDP are the goods and services that we produce to service the debt. And in the beginning, that kind of feels good. You can get some growth and you feel like there's not too big a price. I mean, I remember when Reagan started running deficits and everyone complained about it, but frankly, the economy boomed and he got some decent real growth. And we also defeated the Soviet Union by doing that. But at that point in time, debt to GDP was 20 or 30%. Today, debt to GDP is 125%. So it becomes a much bigger problem. And I have other charts that will show just how rapid that debt growth has become. And eventually, the math just overwhelms you. But let's look at another chart that is up on my screen now. I hope you can see it. This is a chart from the early 70s, 71 time frame to present of GDP. The bottom line is U.S. GDP, and the top line is U.S. debt. And think about it, the GDP is the productivity of the country, and we use that to pay the interest on the debt. And you can see that way back in the early 70s, they were fairly balanced, and this wasn't a problem. And we went off the gold standard, and even then, although we had some inflation, they got it back under control, and it didn't really become a problem for some time. But what eventually happened is that people, governments and financiers, realized that the debt was a way to get themselves to, in government's case, spend more than they had, and in financiers' case, get wealthy by borrowing money that they knew would depreciate. And so we grew our debt burden much more rapidly than we grew our GDP burden, GDP underlying which pays for it. And so the combination of those two things has now led us to what I call a sovereign debt crisis. And so, we just, it's really kind of quote unquote gotten out of control. Let me show you a different way of looking at it. This is the United States debt burden from inception to present. And, it almost doesn't register until 1971. And what you can see here is that from, 2020 to present, we've added 11 trillion of debt. I mean, it took us 220 years to reach 11 trillion of debt. And so, you've now reached the point at which the compounding effect has just gotten so extreme that, we run deficits every year. I just checked the Congressional Budget Office estimate for the deficit this year is 1.9 trillion, just like it was last year. And in spite of Doge and higher revenues coming in from tariffs, the big beautiful bill is going to turn around and spend all that, and probably more so. So the problem is really a problem of growing debt, and debt in excess of what the underlying economy can support.
As Lepard explains, America's problems didn't appear overnight. From Lincoln's Civil War greenbacks, to Roosevelt's gold confiscation, to Nixon's abandonment of the gold standard, the U.S. has moved step by step away from the principles of sound money. The Federal Reserve's interventions, massive balance sheet expansions in 2008 and again in 2020 were not temporary fixes. They were symptoms of a system addicted to debt and stimulus. And in Lepard's view, another big print is inevitable. But this isn't just about history, it's about what comes next. In the second part of the conversation, Lepard connects today's situation to the inflationary spirals of the past. He argues that once an economy tips into inflation, the cycle is brutally hard to break. The price is often paid by working people, while the financial elite benefit from cheap borrowing and asset ownership. This, he says, is why inflation isn't just an economic issue, it's a moral one. And it's here that Lepard begins to outline why inflationary policy rips at the very fabric of society. Which brings us to his stark warning about where America is headed today. Let's get back to the video.
The CPI in June of 1947, the CPI was up 17.6% year over year. In February of 1951, the CPI was up 21.0%. So what you see is if we get into a situation where we're going to have yield curve control, the government's going to have to print a lot of money, fine, but that printing is going to cause a lot more inflation. And so, the 9% inflation that we saw as the peak in the COVID example, it could become even higher in the next time around. And I remember the 70s very well. I was a teenager, but I remember the 70s very well. And there were like 3 waves of inflation. And history shows you once you get into an inflationary cycle, it's very hard to stop it. Until you do something really extreme, like what Volcker did by putting rates at 20%. And so, I believe we are now in an inflationary cycle, and, the price of gold and the price of Bitcoin and the price of the bonds, the long bonds, are showing us that. And that's why I partly wrote the book to try and educate people and warn them that in this kind of a cycle, they really need to have a piece of their portfolios devoted to sound money. Because sadly, I don't think this inflation is going to get better. I mean, it got better when Powell took money supply growth down to negative by jacking rates very quickly. But eventually they're going to be forced to turn around on that. We already see President Trump calling for a 300 basis point cut. And as you know, Jay Powell will be out of there in May of next year. And my sense is Trump is going to get his way. So, I think we have a lot of inflation in the future, Michelle. That's kind of what I'm saying. They've brainwashed us and gaslit us into thinking inflation is good and that we'll fall into a deflationary depression if we don't have it, which is just a blatant lie. I mean, the Fed, the Keynesian economists, the people who benefit from inflation have the rest of us thinking that we have to have some inflation. I mean, my view is, what's wrong with deflation? Who doesn't like falling prices? I mean, take a look at computers, for example, and technical things. I mean, the prices in those things have been falling for years. It's been fabulous, right? But my view is deflation is a great thing, and I try and point that out in the book. And there's a whole chapter on why deflation matters. And Jeff Booth is the best person that started kind of explaining why we can't run an inflationary monetary system with a deflationary world, which is what we've got. But inflation just rips at the fabric of society. Think of, what happens is there's something called the cantillionaire effect, which is just a fancy word for saying that inflation benefits a certain class of people who get the money first and who can borrow cheaply. I mean, if you're on Wall Street or you're a big corporation or you're a hedge fund or you're a money manager, you can borrow at the Fed funds rate plus a small margin. If you're a regular working stiff or an average person in America, you can maybe get a mortgage at 7%. That's the lowest cost capital you can find. And after that, you're at the hands of the credit card companies, which kind of look like the mob. I mean, they're charging 25% on average. I saw one that was at 31% the other day. I mean, that's just ridiculous. We used to have usury laws in this country, and they're gone. So, and it just rips at society. I mean, the last time you saw an inflation like this was 1919, where you had a really huge, the price level doubled post-World War I because they printed all the money. The Fed immediately violated its charter and printed all the money to finance the war, and the price level literally doubled. And what you had is you had all kinds of race riots, you had all kinds of labor strife, lynchings went up enormously. The Ponzi scheme was in 1919, which kind of echoes what Sam Bankman-Fried did. The Chicago Black Sox were 1919. It's just, and it led, what it led to? It led to prohibition. There was a whole group of people who thought, well, society's falling apart. It's all because of the alcohol. We gotta stop people from drinking. So they passed the Volstead Act, and that really wasn't the problem. The problem was that the money wasn't sound during that time frame. Now they eventually worked their way back onto the gold standard, and things became stable again. And then that kicked off the Roaring '20s. But anyway, that's a long story. Inflation hurts a lot of people, Michelle, and there's a good chart in my book. I don't have it here for display now, but it just shows how much of the wealth is owned by the 1%, and how if you look at the last 20 or 30 years, the wealth of of everybody, the bottom 50% of this country has been just struggling to survive and just getting by, and their wealth hasn't increased at all because they don't own assets. And if you look at the people who own assets, particularly the people at the top who own assets, they benefit from inflation because they can borrow cheap and buy assets that go up more than the cost of the capital. And so it's just a very straightforward, unfair deal. And that's not what the Constitution and the founding documents of this country, promised. I mean, the notion wasn't that we would all have equal outcomes. It's not socialism or communism, but it was that we would all have equal opportunity and a fair deal. And we do not have a fair deal. It's blatantly obvious we don't have a fair deal. And you can see it in so many places. And, my book outlines why and how we got here, and how if we want to go back to that great country that we once had, which had problems for sure, but if we want to go back to a fairer system, we've got to start with fixing the money.
Larry Lepard doesn't mince words. Inflation is theft. It quietly redistributes wealth from savers and workers to debtors, governments, and financial elites. The Cantillon effect ensures that those closest to the money printer, Wall Street banks, hedge funds, and corporations, get access to cheap capital first, while ordinary people are left dealing with higher prices, stagnant wages, and predatory credit. This is why Lepard insists that inflation is not just a bug of the system, it's the system itself. And history confirms the consequences. After World War I, runaway inflation fueled social unrest, labor riots, and even prohibition. In the 1970s, 3 separate inflation waves destabilized the economy until Paul Volcker was forced to raise interest rates to 20%, a painful but necessary reset. Today, debt to GDP has soared to levels never seen before, leaving policymakers with almost no room to maneuver. If the government resorts to yield curve control and another round of trillion-dollar printing, we could be staring down another historic inflationary cycle, one that reshapes the global financial order. But here's where Lepard's message intersects with opportunity. If unsound money is the disease, then sound money is the cure. And in the 21st century, sound money isn't limited to gold. Bitcoin has emerged as a digital alternative, scarce, decentralized, and immune to manipulation by governments or central banks. Lepard's analysis suggests that in an era of relentless money printing, assets like gold and Bitcoin won't just protect wealth, they'll thrive. As trillions of new dollars flood the system, the case for hard money has never been stronger, so the choice becomes clear. Trust a system built on debt and political promises, or seek refuge in assets that can't be printed at will. For investors, savers, and anyone looking to preserve their future, this isn't just theory, it's survival. And let us know in the comments, do you think Bitcoin will become the ultimate hedge against the big print? If you found Larry Lepard's insights as urgent and eye-opening as we did, make sure to hit that like button, subscribe to the channel, thanks for watching, and we'll see you in the next video.